Stackers, markets are shifting fast. Federal Chairman Jerome Powell just shook things up. In today's gold and silver stacking series, we're going to break down the best time to buy gold and silver, also the hidden drivers in this week's markets, new insights on mining and stocks. Now, this is something brand new I'm adding, and then also the stock market versus precious metal showdown, and what you can do now to save and protect yourself and your family in your future. And also, we have our special silver giveaway for one attendee on this live presentation. So good morning, everybody. I hope everybody's having a great weekend so far. And I just wanted to kick things off. This is going to be a slightly different because I'm bringing in a different context to uh, this week's presentation. Now, typically I don't talk about mining stocks or, what people recommend or anything in regards to that. But I'm going to be sharing some clips that is very important. So when you watch this video, everything that I'm sharing here all ties together to help you make a more safe and secure financial future for yourself and your family. So we're going to go ahead and jump right into this. And what I always like to do every week is just give the quick breakdown on what the markets are, what they closed at on Friday. Okay, so yesterday they closed at 33.71 for gold and 38.90 for silver. Now, going back to when I first started the gold and silver stacking Saturdays, on the pre-launch date we had gold that was at 33.69 and silver was at 36.02. So you can see when you go over the course of the weeks here what has been happening. And of course, we have the spike here. That was when there was information about the potential tariffs on gold coming into the United States, our gold imports. Okay, so that's what drove that really up high that week. But then also you see here the consistency in the market. That's what's very important. What I'm going to be touching on soon here in the video is how that plays a part in the long term forecast for gold as well as silver too, as well, because there's that direct correlation, which I've always share with everybody, the gold silver ratio. So in this case here, silver did finish up nice with a nice high. Okay, so since we started doing this, this was silver finished at the highest it has in the last 6, 7 weeks here. Okay, and I do want to point out an interesting fact. Okay, so if you go back to a year ago today, August 23rd, gold was at 25.12 an ounce and silver was at 29.82 an ounce. So you see the huge difference in just the year time frame. And this again plays into what I'm going to be sharing in this presentation. So I just want to point that out real quick. Okay, so you look at the difference there. So gold's up 1,200, and then silver's up just over $9 there. Okay, so it's something kind of keep in mind as you're watching this video. So I always talk about the gold silver ratio because there is that direct correlation. Usually gold spikes first and then silver's slow to follow, but now it's starting to catch up where silver's starting to gain momentum. But in this case here with the price at 33.71 and silver at 38.90, that means it would take 86.67 ounces of silver to equal 1 ounce of gold. And then typically in the modern day era, there's usually that 40 to 60 to 1 range. So typically silver falls into a 40 to 1 or 60 to 1 where it would take that many ounces of silver to equal gold. So this is what we're looking at as far as moving forward. It will eventually even out. So that'll show you the type of momentum in the gains that'll happen with silver as well as gold rises. As gold rises. So I wanted to point that out as well. Okay, so like I said, now is the time. You're not too late. Okay, this is something with what I'm going to be sharing here in this video. Whether you're just doing a little bit at a time or you're able to do more at a time or whatever, everybody's budget's different. Okay. And that's what I wanted to do is present this to everybody so they have an informed decision to, decide what they want to do. Okay. So right now, whether you are saving in silver or gold, silver has the maximum more potential at this point. But as far as gold goes, that's always been the safe haven. So you can't go wrong in either one, in my opinion. But like I said before, I am not a financial advisor. I'm just sharing with you the information that I've used for myself and my family, and then also information that I want to share with people so that the average everyday person has a better grasp as to what they can do to protect themselves and their family. Okay, so I always encourage people to do their due diligence, and if you do have a financial advisor, you may want to consult with them, but also with what I'm going to be sharing here in this video, you may want to make sure that they watch the video as well. Okay, so let's jump into what this is an article from This is courtesy of Money Metals. So I wanted to share this and go over this real quick. Jerome Powell gives all clear a signal for gold and silver to rally. Okay, so in this article, which I'll have the link below the video as well. Um, Mike Gleason does the article, and then he's a consult. He's talking with David Morgan of the Morgan Report. Okay, so and while many precious metal bulls may be frustrated with the recent sideways action in the prices of gold and silver, David tells us why he believes the recent consolidation should be viewed as a very good thing. Okay, this is what when I talk about when gold hit its high around 3,400, and then it's been kind of bouncing back and forth between 3,200 and 3,400. That's actually a good sign. Same with silver. It did hit that, it did touch close to, around 40, and then it's been kind of bouncing around, but it has been staying steady, which I showed in the chart just here a few minutes ago. Um, Chairman Jerome Powell has given an all-clear signal for gold and silver to move higher with his remarks at Jackson Hole on Friday. So he did have his report. It appears the Fed is now almost certain to resume its rate-cutting campaign in September. In reaction, the Federal Reserve note is moving down sharply in relation to other fiat currencies, and precious metals are already buoyant. Gold is up 1% now on the week, with virtually all that gain coming here on Friday since Powell's comments hit the wires. And when he was doing this article, it was at 33.84. We saw what the close was. And then silver's up sharply today and now posted a 2.5% gain for the week, having added close to $1 as the time of this report. So when he did this report, it was at 39.15, but we saw that it still closed at the 38.90 there. So that was really good. Inflation is still a problem, but the Fed can't seem to hold the line on rates anymore. This means the negative real return on holding dollars will steepen, and that's rocket fuel for gold. Gold seems to have so many ways to win in the current economic environment with war, tariff turmoil, debt problems, inflation, and stock market volatility are all reasons to buy gold. And many of these things keep happening all at once, which is what we're seeing here right now. Earlier this week, another big bank, UBS, followed Citibank and Bank of America in getting more bullish on gold. The Swiss investment bank nudged its Q1 2026 forecast gold price by 100 to $3,600 an ounce, and this would mean new record highs over the next 6 months or so. Okay, so we're in the 33, 30, close to the 34 range. So even they're saying within the next 6 months, they're predicting it to be around $3,600 an ounce. Uh, my personal feeling, it's going to be higher than that, but that's, just my personal feeling. Gold reached its current record high of 3,500 in April. The yellow metal has since consolidated and is generally traded sideways in the 3,300 to 34 range over the last few months. UBS also raised its Q2 2026 gold forecast by 200 to 3,700 and added a third quarter 26 target at the same level. Cited several factors influencing their bullish outlook, including U.S. macroeconomic risks, de-dollarization, central bank gold buying, and also investment demand globally. Now, that's what that was the initial part of the article. Now, this is what David Morgan, and he's the that puts out the Morgan report. So that's something that you can look up online too as well and see his information about what he shares in the Morgan report. But okay, so here's his take on part of the article and part of the interview. I'm happy with this consolidation. The reason I am is the last thing you want if you're a long-term investor, be it real estate, be it stock market or collectibles, is an acceleration phase that goes parabolic, meaning where it spikes real high. So every day, oh my God, silver's up $1, it's up $2, it's up $3. You don't want that. Okay, what you want is I call a stair step. So you go from the $30 level, and he says, remember we got there, I think it was 33 something. I'll have to look at that. Okay. But the idea is correct. The numbers may be wrong, but it consolidates around that level. Okay, so he's kind of talking about, when silver finally hit that $30 mark, that was like a huge thing. Okay, then it makes another $2 move up, and it consolidates around that level, and then makes another dollar up, and it consolidates. So remember, we had trouble getting into the 30s. and then we consolidated, and then all of a sudden we're getting near 40, and everybody expected it to do it the next day, but now we've been seeing it consolidate, meaning it's still bouncing around, which is a good thing. Okay, because everyone's like, well, what are you talking about with gold? We want our gold or silver. People are instantaneously wanting to think that it's going to jump, by a dollar increment each day for silver, or hundreds for gold, and it's by doing it steady like it's been, that's actually a very good sign. But what that means is you've got a lot of buyers and sellers, and if it's going sideways, they're equal. So the buying pressure and the selling pressure are equal, and the markets more or less are in equilibrium. I'm not talking about short selling or any of that stuff. We're leaving that to the side. We're just going by what we see. So you build a base and you move up from that. So that's good. So this is something that, with what he's saying here, so like everybody's automatically expects that, okay, if I save in silver or gold today, I'm going to have, you know, 10%, 20% gain or something just like that. And what I'm trying to share in this video today is how the long-term range of gold and silver is going to be beneficial for yourself and your family in your future. So I don't normally talk about mining stocks, but what I want to share with this here, this is courtesy of Global One Media Group on YouTube. And also Ashley is doing this interview with Don Durrett, and he's from goldstockdata.com. Now, he's going to be talking about certain silver and gold stocks in this video, but what I want to share in this video, the clips that I'm going to share, shows you the importance of thinking in that long-term range. That's why I want to share this with everybody, because normally I'm sharing just strictly gold and silver metal suppliers and their aspect on stuff, but this is somebody who's looking at it from the mining stock portion of it. So you have to bear with me because, of course, there's the commercial. So give me 1 second here. So we're going to start. Here we go.
Welcome to Stocks to Watch. Today we have one of the most respected. Gold and silver have really been on a tear lately, and big miners are posting strong earnings. So, which companies would you say are at the top of your watch list right now, and what's been driving their performances?
Well, I'm an alpha investor, so I'm chasing big alpha. And so since I'm chasing big alpha, I look long term. So a lot of people, they're always chasing momentum. They're always looking, what stocks are really hot right now, and everybody has a kind of wired for 12 annual returns. Everybody looks, they just want to keep making money, make money, always, positive. But for me, I'm a long term investor, so I always focus on. So since I'm looking for big alpha, I don't really care about the next 12 months. And so I'm always looking for projected earnings in the future. So for me, my projected gold price is $5,000. So if you take a 50 GSR that takes silver to 100, so I'm looking at these stocks, okay, maybe they're up 100%, maybe they're 50% right now, but for me, I don't really care that much. I'm looking, what are they going to be worth when gold gets to $5,000, which is, I think, about 24 to 36 months. So I'm looking out, okay, what stocks are going to be 5+ baggers at that point? So, I mean, we can look at, it's amazing how cheap these stocks are at this point. I mean, Barrick and Newmont are kind of.
Okay, so when he's talking about baggers, he's talking about when he looks at a mining stock that's at say there's going to be a clip here I'm going to share where he's talking about one that was originally around 40 cents in that. But when it's, he's like a 5-bagger, that means that it's going to be able to increase fivefold. Okay. So in this case here, what he's explaining is with some of these mining stocks is that you want to get in obviously as low as possible. But like when he says something, he makes reference to like a 50 bagger. So, but when the market doubles in price, so something we'll use the example of the 40. So if it goes from 40 cents to 80 cents, that's basically doubled in price. So then instead of it being a 50 bagger, it would be a 25 bagger. So you initially miss that first part of the momentum. And that's the same with gold and silver. Okay. As the physical, tangible gold and silver. Okay. So, I wanted to share his forecast and, that point of what he's saying, that he's looking at, even from a mining stock perspective, of gold hitting 500, and then in that case, or I'm sorry, 5,000. In that case, when gold hits 5,000, then the gold to silver ratio, which is what I always talk about, would be silver would be around 100. So you're looking at, silver at 38, 90, um, versus, $100 an ounce. Okay, so that's something to kind of keep in mind. So then I'm going to share this other clip here. Let's see here. Hopefully there's not a commercial. There we go. And I'll have this link below too as well. I encourage you to watch this video too, all the way through, the one I'm going to share it on here. So if you do watch it, let me know what your thoughts are on it, okay? Okay.
Bull market. If you don't get in now, the early birds, you're not going to get these big returns.
Right. Excellent point. So that's kind of the strategy, is to get in now, but then you're not quickly turning it around. It's sort of a longevity commitment, right?
Yes. So most people are going to sell early.
Yeah.
Because they don't know they don't know how to handle 100-200% return. For instance, Avino, when Avino was trading at 40 cents, I said it was a 50 bagger. Now it's very unusual for me to see a stock as a 50 bagger, but when a stock gets really cheap, Avino was a silver producer, by the way. So when I see a company get really unbelievably cheap, I say just buy it to the bottom. And when I was saying buying Avino at the bottom at 40 cents, that was pretty much the bottom. I think it got a little bit below it, 39, 38, maybe 37, and that was as low as it got. Meanwhile, when it got sub $30, I said buy it to the bottom. We got a 29 handle. We didn't get a 28 handle. Today it's a 68. Avino's at 350.
Yeah.
So when Avino went from 40 cents to 350, people couldn't hold on to it. Because the $1.50, $2,
You're impatient.
Yeah, they're impatient, and you don't. There's such a thing as selling too early. You want to wait till the bull market is at least mature before you even take any profits. So we're not mature yet. We haven't really even broken out, in my opinion. I think silver needs to get above 40 before we actually break out. So you can sell too early, and a lot of people aren't going to have patience. Mm-hmm. You need to have an exit strategy for each one of your stocks. Every stock you own, you should have an exit strategy for. And the only reason you really want to take profits is if you don't really believe in the story. And so if a stock really takes off, you kind of bought it for the momentum, but you didn't really buy it because you love it. Those are the stocks you might want to sell half.
Okay. So this is, like I said, I normally don't do stock, or mining stocks or picks or whatever. Now I've followed a lot of people, and one of the people I follow is Robert Kiyosaki, and he's a big, obviously physical silver and gold. Same with Mike Maloney from goldsilver.com. They're talking about physical, tangible gold and silver, which is ultimately, in my opinion, that is what you want to do, but a lot of people aren't looking for that physical aspect of it, which ties into what I share with people with the sound money wallet, which I've talked about before, which I'll actually touch on right at the end of this video. But like he's saying, you have to have an exit strategy, but at the same time, you have to have patience when it comes to precious metals, whether it's in the physical, tangible aspect of it, or in the case like here, what he's referring to is with the mining stocks. Okay, so but like I said, with like Robert Kiyosaki talks about mining stocks a lot, but he never actually divulges which ones he gets into. So this kind of a refreshing aspect because he's actually sharing specific stocks. So that's why I'll have the link to this video below. And if you have any questions about it, feel free to reach out. But I encourage everybody who's on this call or watches the replay to definitely watch this video because you're going to get a lot of great insight from Don there. And I want to thank them and Ashley for the putting that video together. So I want to thank everybody for that.
Yeah.
So, whoops. Okay, so now, I came across this, and I do want to share this because this is something that for financial advisors out there, sorry, hold on a second.
$1 billion business. Look at this. Since launching stock at
Okay, so for the financial advisors out there, that if you're not encouraging your clients to save in the form of gold and silver, you're flat out dead wrong. Okay, and you're actually doing them a disservice. And I'm going to come out and say that. And so if anybody's a financial advisor and they want to say something, you have to look at the facts and everything that I've been sharing here with gold and silver. just proves that you're wrong if you're not encouraging people to save in the form of precious metals, okay, and physical precious metals, okay, or in this case here, like with what I just shared with the mining stocks, okay, that's one aspect of it there. But um, Mike Maloney and Alan Hibbert did this breakdown of this article that was this guy was trying to say he was promoting it. It turns out the guy is promoting his own thing that he's trying to sell, but what he's doing is he's degrading and bad mouthing precious metals and specifically gold. And he's trying to say that, his stocks, his reports, which I believe it's the Motley Fool. And I'm sure if you do any type of research online and you're looking into anything as far as stocks, you will see the name The Motley Fool come up as far as like a recommendation for, getting information on picking stocks and everything. I've had stuff mailed to me, but what they're doing is they're kind of picking apart with what this guy said. Okay, so I want to go and skip to the part, and this is actually kind of comical, and that's where I want to skip to the part where they're actually breaking down part of his article, and then they actually show the stats based on what he's talking about.
Or items like gold, and you can compare them over different periods of time. And yes, there are periods of time where the stocks outperform gold, but if you go to this century, just start it off on January 2nd, because January 1st is not a trading day, January 2nd, 2020, and you cover this entire century, gold has outperformed the S&P 500 by triple, more than triple. It's way, way ahead of it. It makes stocks look like a really stupid investment. Yeah, everything goes into it. But this article is doing nothing but cherry pick. Go ahead. I'm sorry I interrupted.
This is good.
It's quite all right. So yeah, let's actually look at the next one here, because this is the last part of the article I'm going to read, and then I have like the most hilarious plot twist after this. So it's so good. But what if there was something that not only outperformed gold, but also outperformed the market and outperformed it consistently for more than 2 decades? That's what I want to show you today. So this is the product that they're selling. They have a stock picking service that you can pay money for. Okay.
So this whole article is written as basically it's sort of a dishonest advertisement for whatever they're selling. They're trying to scare you into their subscription. Okay.
Yes, and look at that. Look at this. Since launching Stock Advisor in 2002, our average recommendation has returned 1,007%. That's not cherry picked. No, everything else is, but not this one. That's not cherry picked. That's across the board. During that same stretch, the S&P 500 returned just 173%. Okay, and they have the dates cited here, so that's super impressive. It really is. And I made a chart.
The gold return since that same date.
This is exactly what I did, Mike. So this is excellent. 173. This is that 1,007%. You add in gold, 1,007%.
So, oh boy.
Actual numbers from February 2002 to June 23rd, 2025. That was the date the article was written. I mean, this is hilarious. So even all their threat, they can beat the market. They can't beat gold.
Right.
They can't beat gold. I mean, this is just hilarious.
Okay, so in this, I wanted to show this, and I laughed the first time I was watching this. I mean, I was laughing just as hard as they were, because that's what you see out there in the market. Okay, and that's why I keep saying this is why I'm doing these videos, is to share insight, because there's so much garbage out there and people trying to sway you in one direction or another. Now, like I said, I mean, I'm a firm believer in physical, tangible gold and silver. Okay, so that may not be your thing, but whether you're doing mining stocks, or you're doing stuff, if you're just doing stocks or real estate or what have you, or even cryptocurrencies, do your due diligence. But that's what I want why I enjoy sharing this information with everybody, is because there's so much, like you'll come across these advertisements all over online where they're trying to sell you their usually, it's like in this case here with this company, it's a stock report. Okay, so they want you to pay X amount, and then every month we'll send you our reports with X amount of picks. You don't need to do that. You can find the information without having to pay somebody to do it for you, okay? And that's where I like to share this information because hopefully it's giving you some insight. But here this guy is bragging about from February of 2002 to June 23rd, 2025, how they had a 1,007%. Well, in that same range, gold had an increase of 1,010%. Okay, so just think, when you're looking at that context between stocks and gold and silver, and Mike and I want to talk about physical gold and silver. Um, that's something to keep in mind. Okay, so this kind of all directly correlates into what I've been sharing with people about the sound money wallet. Okay, if you don't want to physically hold it, you can own it and have somebody hold it for you, but then you can actually liquidate it when you want or convert it back and forth to gold and silver or between the two or back to your fiat currency. Okay, and I do, I'll touch on again on it real short here in a minute. Okay. But I always like to show this because this is the world central bank gold purchases over the course of, like I always point out the key date of February 24th. That's the official, I guess, Ukraine, Russia war. Um, all that conflict was going on for a while, but that's kind of like a key date. But you see what's happened since then, the amount of central banks purchasing this, since the Ukraine-Russian war and since what at that time when President Biden put the sanctions on Russia, that's what triggered all these central banks purchasing more gold because of the fear if that the United States wasn't going to approve of something another country was doing, were they going to put sanctions on that country? So that's kind of why you've seen this and why, because since the sanctions put on Russia, that's what's continually since that date driven central banks to buy more and more gold. Okay, and where they're actually stockpiling it, physical gold. And now, of course, there's silver, but they're not really still talking about silver. They're still talking about gold, but they're stockpiling silver as well. Okay, so I just wanted to share that. And then, like I said, if this is courtesy of goldprice.org. This other one here was from macromicro.me. And then also I took this off this morning. So if you look at, if you go to goldprice.org, you can actually see, by month, by year, 5 year, 10 year, so on, and 20 years, and even going back to the 70s and that. Okay, like if you want to do a 50 price range, but like Mike always talks about, is a cup and handle here. Here we're doing the huge cup again from 2020 to 2025, and here's the handle forming. So what you can kind of get an idea of where it's going from here. But anyways, if you go to that site, it'll show you the daily change, the 30-day, 6-month, 1, 5, and 20 year for gold and silver. But if you look at it, if you're going from, like I said, gold, it was up, when I showed that statistic from August 23rd of last year to August 24th of this year, or August 24th of last year, to this year. Yeah, I had that right. August 23rd. Sorry about that. You saw the increase in gold. Okay, so in a year's time, you're having like a 32%, almost a 33% increase. Same with silver. You're looking at close to a 28% increase. Okay, so this is something that it's kind of good because it'll give you an idea of what you're looking at short term versus long term. Okay, so what I want to do here is I see that I've got Kathy, Sue, let's see, Joe, David, and Tom on here. So today we're giving away a 2020 Silver Eagle. I was going to do the membership today, but I'm having a very special presentation here. It's a Galena Ghost Hunt promotion that I'm doing next week. So I will do the membership next week. So be sure to bookmark this or at least register for that live stream, okay? And depending on how things go, I may even do a recording, but what I encourage people to do is register for it, then you'll get the link to be on the live stream and be able to be eligible to win one of the prizes. Like in this case here this week, we're giving away the American Silver Eagle, okay, right here. And then next week we'll be doing a 1 year membership with 7K, the basic membership. Okay, so that's something that's a huge value for everybody. But in this case here, so we're gonna go and do the drawing real quick here. But like with the sound money wallet, I want to kind of close with that. Okay, so the winner is Joe. And congratulations, Joe. Send me an email at rick@silverandgoldsolutions.org and put your contact information, your mailing address, and also your phone number, and I will probably reach out to you, either phone call or text, and touch base to make sure I have all the information ready, and then get this shipped out to you in the mail on Monday morning. Okay, so real quick, I always like to point this one out. This was the huge benchmark for silver when it hit 39.33 an ounce on July 22nd, and that was a 14-year high. So, things are looking up for silver, and also gold. But with the Sound Money Wallet, I encourage people to watch the wealth strategy presentation for beginners that I have on this channel. I'll have the link for that below as well. But then also with the Sound Money Wallet, it gives you the opportunity to save in as little as $1 at a time. So once you have your account or membership set up, you can, if you wanted to do $1 a day, $5 a day, whatever you wanted to do, or just once a month or something, this allows you to start. And that's why we, for gold and silver, people, they call it stacking, because you're slowly but surely stacking gold and silver. Whereas you don't necessarily need to, not everybody has $3,400 laying around to buy an ounce of gold. Okay. So in this case here, you can incrementally go, start purchasing percentages of gold to reach that point. That's what's nice about it. Same with silver. If you don't, silver is obviously a lot cheaper than gold, but even if you wanted to put like $10 towards silver, you could do that. And once you hit the percentage of a silver coin, you could have it shipped to you. Okay. Or conversely, you can hold it, because, 7K has a Sound Money Wallet, and with that, it is it's insured, and it's actually held for you, and it gives you the option of liquidating it. Say say you bought silver at $40 an ounce, and it spikes to $50 an ounce or something on a day or whatever. At the time you log into your back office or your Sound Money Wallet, it'll show you the exact price of silver at that time. Okay, so like if you bought it at 40 and it's at 50, you could instantaneously sell that, or take that percentage if you wanted to of gain and put it into gold, or however you want to do it. So it gives you that freedom. Or if you wanted to liquidate and send it back to your bank account, as in your fiat currency or US dollars or wherever you're at, you could do that. That's what's so nice. And no other company across the globe has what 7K has with Sound Money Wallet. So I encourage you to check out the Wealth Strategies presentation, check out the link below, and it's just get as much information as you can. Okay, if you don't want to do it, that's great. If you do want to do it, that's fantastic. Okay, I try to share as much as I can with everybody, because I want everybody to have a more informed decision for themselves and their families. So I really appreciate everybody's time. I really enjoy this one. I tried to give a different perspective between the mining stocks, and then also the stock market versus gold. It all ties together. And, if you're looking for short-term gains in that, maybe gold and silver are not your cup of tea, so to speak. But with what's being projected even by these big banks, and also, with everything that the market trends are showing right now, you do have that potential. So the potential is there. And of course, there's nothing is ever guaranteed. So, you have to do your due diligence. But anyways, even with the fact that, like with what I talk about with 7K, and that is that nice feature is having the ability to, save in it and have somebody store it for you, or you can have it shipped to you, but you have somebody store it for you. And then if it's stored there, in their vaults, you can have it liquidated on the click of a mouse. Okay. And that's something where no other company has that feature, where they can instantaneously have it sent back to your bank account. So I appreciate everybody's time. I hope you got some great insight. If you want to go ahead and put your biggest takeaway from the video, but I do encourage people to go back, and if you have the time to watch that, the video link I have below for Don and his insight. And I want to thank Don, Ashley, Mike, and Alan, and also Money Metals and their insight. And I really appreciate everybody's insight. And I enjoyed sharing this. If you have any questions, please feel free to reach out to me at rick@silverandgoldsolutions.org. And again, I will have the link to register for next week's live stream, and we will have the special membership giveaway at that time. Okay, so if everybody has a great rest of your weekend, enjoy it, and we'll see everybody next week. Take care.